Welcome to another edition of Fridays with Fred. My name is Fred Set. So what I'm going to talk about today is forecasting for 2015. Now, before you guys get your hammers out and beat me up for my forecasting, I'm not an economist. I don't have a crystal ball. I can't find out what's going to happen exactly. But listen, I've been doing this 11 years. I watch the market heavily. I'm involved in the marketplace with hundreds of our clients, as you already know. So I have somewhat of a strong grasp of what I think is going to take place based off all the leading indicators that are out there. Now, the one thing that we've heard consistently is that the Fed is going to increase rates in 2015. And I know we've heard it for the past 2 years, and they're still like 4%, 4.5, 4%, 4.5. But they've said that, hey, sometime in quarter 2, quarter 3, we're going to raise the interest rates because that's how they're going to entice Wall Street to get back in the game so they can invest their money because interest rates have to be higher so they can get a return. So let's say interest rates are going to go up somewhere in the low 5% in 2015. They got to make sure the economy is healthy enough to handle that type of increase. B, they got to make sure the housing market can sustain something like that. Because if that happens, get this, interest rates go up, it decreases affordabilities for the majority of buyers that are getting financing. And if that happens, then prices might soften so that the prices can match that affordability. So a ripple effect could take place where all of a sudden if rates go up, all this inventory can come on. Or rates go up and this huge rush of buyers come in and swoops up the inventory before rates really get higher. But ultimately, I do believe that rates should be going up, high 4s, low 5s, sometime middle of next year. Okay? Now, as far as prices go, I just don't see how prices can physically go 10, 15, 20% higher in appreciation just the next year. I think at this point, at the end of 2014, we are in a position where prices have stabilized. Days on market have increased. And we're more in a traditional marketplace as we speak. And I really believe that's going to continue into next year. But as you guys all know, one thing can take place in the marketplace with the Federal Reserve having a conversation, do this, do that, and all of a sudden it can shift the housing market. So I don't see a drastic difference in what next year is going to hold from where we're at now. It's still going to be a healthy housing market in Orange County. I really believe there's plenty of good inventory for buyers to be able to buy at fantastic interest rates if they're getting financing. And sellers are still getting really good money for their properties as appreciation's gone up over the past couple of years. So once again, it's more of a traditional marketplace, I think, next year. It's healthy. There'll be buyers that'll buy. There'll be sellers that'll sell. Now, it's just up to you what your real estate needs are going to be next year in 2015. And as you already know, we would love to service those needs. So any questions whatsoever, if we can help you buy a property, sell a property, rent a property, contact us 7 days a week at 949-272-0125. And go check out our website if you haven't already at www.bestocproperties.com so you can see all the properties for lease and for sale in our Orange County. And we genuinely look forward to hopefully servicing your needs or at least continuing to educate you on a daily basis with our blogs and a weekly basis with our videos. And tune in next time for another awesome edition of Fridays with Fred. Why? Because that's what Fred said. Take care.